Hi traders, Nick Shaheen here recapping the week ending December 5th, 2014. We had, as far as recapping the day first, Friday, option expiration day, obviously. The markets were all green except for the NASDAQ. NDX was flat, down 0.01%. However, with 5 minutes to spare, they were red except for the small caps. Small caps led up 0.8% green on the day. The Dow 0.33. Strength game concentrated for a few areas. I'll show you a look. But first, here is the day with 5 or 10 minutes to spare. Actually, 5 minutes to spare, 10 minutes here, 5 minutes here. And it was this last ditch within 5 minutes that brought it up to an SPX close that's higher than the all-time high. Otherwise, we would have ended lower than the all-time high, and that would have been bearish on the day given that this was the high and they couldn't retain it. Different story. But last minute, invisible hands came in, levitated everything. Apple almost broke down, yet look at this ramp up. Conversely, the VIX got hammered about this much in the last 10 seconds or 2 minutes. Same. So money came in and out, regardless of how it happened. It happened. Green day, except for the NASDAQ. Let's just call it flat. Let's look at where the strength came today by looking at the indices heat map real quick. NASDAQ was weak because of Google downgrade, so it was down almost 3% at 2.7%. Microsoft almost 0.8, and that's a big box. It's about 8% eyeball as far as worth weight. Apple was down a little bit, so it's a drag, worst case scenario. Gilead up, Amgen up. Amazon down also big. So these are the names. Facebook offset a little bit of Amazon. So Russell came, weird situation here. Financials are strong today. However, half of the financials in the Russell was kind of red. I'm not sure what that's all about. Energy was down. This is energy. You can't see all of it, but it's red. S&P 100, all the strength came from here. These are the financials. And Gilead again. So concentrated names that levitated us yet to new highs on the S&P, for example. So the score for the day was green. Can't argue with that. The SPY closed at a perfect 208. Very neat. The Q's 105, which was expected. Let's look at the candles as they look on the daily chart. This is 1 year daily, and you can see how they were fighting for that close to close above that one right there, and they barely did it with $1.50 to spare or so. Still, that's a rising wedge, and it's still nice and up though. You can't argue with prices, although I do all the time. I'm not a bear by nature, but I need fundamentals to drive growth and not engineering and financial engineering and just hoopla. So they're gunning for this uptrend. Let's see what they do with that. That's the SPX. If we look at the SPY just for giggles to see on volume, volume was pretty good compared to yesterday. So kind of erases the doubt from yesterday. Yesterday we had a doji indecision. Today was emphatic. It wasn't indecisive. So the SPY. Let's look at the small caps. Strong day today. Small caps are still wanting to break out of this box I keep mentioning. Good strong day, keeping the uptrend. So dangerous on the breakout. Qs, not a strong day. Dragging, but still in that teeny channel I drew recently. So still deciding, wanted to see. However, the run up to here was probably, from here to here is mostly Apple. Because Apple went up like 30% in that same period of time. So how about the week? What did the week look like? The SPY. Week short of this trend, but still butting up against the top of it. You can't argue with that. Volume decent, much better than last week. Not as good as 2 weeks ago. We still can't fight it. It's going up, and until it changes its mind, it's still going up. IWM had an even better week, greener. That is the small cap. Anytime soon? No. There we go. Indecision. They bounced first, and then 4 weeks of indecision, and then this was really bad actually. This is kind of like to make up for this really bad week. What's next? Is this one? So another red one, or is this harbinger or even more up? I don't know. I don't want to bank against it. It could go either way at this point. Market sentiment is driving market prices and not fundamentals, because fundamentals have not changed yet where you want to go after new highs. Can't argue with that. The Qs are, I believe, red. If I can get them up here real quick. There we go. Yep, red week. First red week in 1, 2, 3, 4, 5, 6. So the Qs are the losers of the week. By losers, I mean just a little bit, so nothing to write home about. All right, so what to expect next? What do we expect next? Well, this week was so heavy with events. We had ECB. They didn't deliver. They failed to deliver, and yet we still held. We had jobs. They delivered, and it was good news, bad news type of a deal. CNBC was tweeting that, hey, we held well in the face of rising rates. And it's like, they didn't raise rates. We just had a good report. That's it. There was no rate hike. There is actually no rate hike. So the anticipation of the rate hike is different than an actual rate hike. In my opinion, nothing is ever priced in until it happens. They will price it in and price it in and price it in, and then when it happens, they will move on it. So it's never priced in. They will move, 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 move. Look at Draghi's event. Every time he spoke, they move. Every time he spoke, they move. And then when he does move, actually do something, they're going to move again. If it's priced in, then they won't move when it happens. So nothing is ever priced in. We won't know how we react as markets until they actually say, we are raising rates. So then we'll know. I don't think we rally on that statement. Maybe afterwards, but not initially. Okay. So what to do next week? Continue doing what we've been doing. We've nailed ranges, and the ranges are there. Just what I like to do is sell risk outside the ranges. So the tricky part is to actually find the ranges. So in this case, so let's go to the SPY that most people look at. Depends what kind of margin you have on your account. You can sell SPX, for example. 21.35 will pay 30 cents, or did pay 30 cents just this week, and that's with 17 days on the clock. You can marry it with a credit put spread to hedge the bet. This way, if moves one way or another, you can close the whole thing for about even money. You can make singular bets, like if you were bearish Google. Looks like Google had a downgrade today. And if you think more people are going to jump on board on this downgrade, and in fact that it broke this, maybe you want to bank on some put spreads down here. So pick on the weak, join the strong. I'm not joining Apple because Apple just ran too far too fast, and I'd be a totally weak hand, even though it's probably worth it. This candle scares me. The fact that they did this in an instant, they can repeat, and it's the tail that wags the dog. And big money is trading Apple in order to profit off of the indices. So pick winners, join the winners, pick on the losers. Today Google was a loser. I won't join Yahoo because they downgraded Google to buy Yahoo, Bank of America. I don't agree. They want to downgrade Google, that's fine. I respect them less for actually upgrading Yahoo because I'm not a fan of Yahoo on its own. Alibaba was punished today. Long term, Alibaba, I think it's still a good play. So it's one of those, set up a long term play and the money calls or something like that. Maybe that'll work well. You can finance it with some credit put spreads as well. So all in all, a bullish week, a little mixed with the fact that the NASDAQ is not so bullish. However, going into next week, we have to evaluate some of the things that happened today and see if we can digest them a little better and see what Monday brings. Hopefully we have no headlines, so we can trade Monday on some fundamentals. Oil looks like, from the statements of President Obama and then the retaliation next day by the Saudis to drop prices, it looks like oil should be lower, stay low for longer rather than shorter period of time. They're battling it out economically, thank God. So the byproduct is more money in my pocket because I have to buy less gas. Will this translate into higher retail prices? I think it will. So maybe the retail play is not completely dead. However, I'm seeing some mixed reports, so that scares me a little bit. But it's still a good thing to do. So we'll rejoin next week. Message me if you have any questions. Nick Shaheen signing out.